Here is something the credit industry does not advertise. The more Americans obsess over their credit score, the more money banks make. Those two things are not a coincidence. They are the same thing. The credit score system was built in 1989 by a private company. It was adopted by banks within a decade. It is now used to determine your mortgage rate, your car loan, your apartment application, and in some states, your job application. And the three companies that control your score, Equifax, Experian, TransUnion, generated over $16 billion last year, selling data that came from your wallet. You are the product, and somehow also the customer. And the most dangerous part of this system is that it made you want to participate in it. It turned borrowing into a game, and Americans are obsessed with their score. This video is not telling you to ignore your credit score. It is telling you to understand what it actually is, who built it, who profits from it, and what number you actually need versus the number they want you to chase, because those are two very different things. Your credit score is a three-digit number between 300 and 850. It is called a FICO score, named after the Fair Isaac Corporation, the company that invented it in 1989. It is calculated from 5 factors. Payment history, 35%, whether you pay your bills on time. Amounts owed, 30%, how much of your available credit you are using. This is called your credit utilization ratio. Length of credit history, 15%, how long your accounts have been open. New credit, 10%, how many new accounts you have applied for recently. Credit mix, 10%, whether you have different types of credit, cards, loans, mortgage. Now, look at that list again. 4 out of 5 of those factors require you to have debt and manage debt and keep debt open. The system does not reward you for having money. It rewards you for being good at borrowing money. You could have $100,000 in a Vanguard account and a FICO score of 580. You could have $2 in savings, 3 credit cards, and a car loan and score 790. The credit score literally cannot see your savings, your investments, your net worth. It only sees your relationship with debt. Here is the business model nobody explains out loud. Banks make money when you borrow. The more you borrow, the more they make. The longer you carry a balance, the more they make. So what do they need you to do? They need you to want credit, to seek it out, to feel like having it is an achievement. The credit score system turns borrowing into a game, and Americans are obsessed with their score. There are entire Reddit communities, r/credit cards, r/personal finance, where people spend hours optimizing their score like it is a video game leaderboard. And the banks love this, because someone optimizing their credit score is someone who is applying for more cards, opening more accounts, keeping old ones open even when they are not using them, spending just enough to keep the card active, doing everything the banks want them to do, while thinking they are being financially smart. Let us talk about 3 specific ways banks profit from your score obsession. Profit Method 1. The annual fee trap. Premium credit cards have made annual fees normal. The Chase Sapphire Reserve charges $550 a year. The Amex Platinum charges $695 a year. And millions of Americans pay these fees happily because the card comes with rewards and status and a really satisfying weight when you put it on the table. And here is the thing, sometimes the math does work out, but the banks are counting on the fact that most people do not use enough benefits to justify the fee. They count on your aspirational self signing up and your actual self paying the bill. Profit Method 2. The utilization game. Your credit score rewards you for keeping your credit utilization below 30%, meaning if you have a $10,000 credit limit, you should keep your balance below $3,000. Sounds like responsible advice. Here is what it actually does. It gives you a specific spending target to aim at, $3,000 every month on a $10,000 limit. If you carry even part of that balance, at the average American credit card rate of 27% APR, the bank earns more from one customer than most people save in a year. The utilization system is not designed to protect you. It is designed to keep you spending at exactly the right level for the bank to profit. Profit Method 3. The hard inquiry trap. Every time you apply for a new credit card, your score drops by roughly 5 points. This is called a hard inquiry, which means people who are worried about their score avoid applying for new credit, which means they keep the cards they already have, which means they keep paying annual fees on cards they might not need anymore, which means the bank keeps earning. Here is something most Americans do not know. The company that invented your credit score, FICO, does not actually collect your credit data. 3 private companies do that: Equifax, Experian, TransUnion. These are called the 3 credit bureaus, and they are not government agencies. They are private corporations that make billions of dollars selling your financial data. Banks report your payment history to the bureaus for free. The bureaus package that data and sell it back to the banks for money. They sell it to employers doing background checks for money. They sell it to landlords checking your rental application for money. And they sell it to you in the form of credit monitoring subscriptions for money. You are the product and somehow also the customer. You provide the data for free, then pay to monitor the data you provided. If that sounds like a good business model, it is. Equifax alone generated over $5 billion in revenue last year from data that came from your wallet. Here's where I want to be straight with you. Your credit score does matter. In America, it matters a lot. And the goal of this video is not to tell you to ignore it. A credit score of 620 versus 760 on a $400,000 mortgage can mean a difference of $300 to $500 every single month. Over 30 years, that is over $100,000 in extra interest paid. That is real money. Your credit score absolutely affects that. But here is the distinction the banks do not want you to make. Having a good enough score, above 740, gets you the best rates on almost everything. Going from 740 to 820 does almost nothing for your actual cost of borrowing. The obsession with maximizing your score beyond the threshold is where the banks get you. You do not need an 850, you need a 740. Then you stop optimizing your score and start optimizing your wealth. Those are 2 very different games, and only one of them makes you richer. Okay, here is what actually matters. 3 things. That is it. Action 1. Get to 740. Then redirect your energy. Your target credit score is 740. That number qualifies you for the best mortgage rates, the best auto loan rates, and the best credit card offers in America. Once you hit 740, pay your bills on time, keep utilization below 30%, and stop spending mental energy optimizing further. Every hour you spend trying to get from 740 to 800 is an hour you could spend increasing your income, building your investment account, or learning something that actually builds wealth. The score is a tool, not a trophy. Action 2. Freeze your credit at all 3 bureaus. This is the most underused financial protection in America. A credit freeze, also called a security freeze, locks your credit file at all 3 bureaus. It is completely free since 2018. Takes about 10 minutes per bureau. While it is frozen, no one can open a new line of credit in your name. Not you, not a hacker, not an identity thief. Go to Equifax.com, Experian.com, and TransUnion.com. Each has a freeze option. Unfreeze temporarily when you need to apply for something. Refreeze when you are done. Action 3. Track net worth, not just your score. Your net worth is the number that actually tells you how you are doing financially. Assets minus liabilities. What you own minus what you owe. Start tracking it. Use a free app like Personal Capital, now called Empower, or just a simple spreadsheet. Once a month, update it. Watch it grow. Unlike your credit score, which was designed to benefit the banks, your net worth is a number that is entirely 100% on your side.
Here's what I want you to walk away with. Your credit score is a tool, a useful tool, an important tool, a tool worth understanding and maintaining, but it is their tool, built by them, measured by them, optimized to benefit them. Your net worth is your tool. It measures what you actually have, what you have actually built. No bank designed it, no algorithm scores it, no bureau sells it. It is just the truth. Get to 740, then stop optimizing your score. Freeze your credit at all 3 bureaus today. It is free. Start tracking your net worth every month. The banks built an incredible system for making you think about your credit score.
Start spending that same energy thinking about your net worth instead. That is where the gap between you and financial freedom actually closes. If this one hit, subscribe, because video 4 is about your 401k, specifically why maxing it out might not actually be enough to retire on, and what to do instead. It is one of those videos where you wish someone had told you sooner. See you there.